Okay, this is March 28th. We're going to look at the gold trade that we put on. Now gold, we bought on this day, although I bought pre-market, right? I don't know where you got the entry. If you waited until the market opened, you got a lot better entry. The open was at 116.74, which is almost, what, 40 cents difference from where it closed on Friday. The thing that gold's doing, and let's analyze this because, you know, we've talked about this range up here, right? Tried to get over it several times, couldn't, right? So what do? You're finally going to come down, test the other side of that range. That other side of the range is from this area up to there, and that's using this bar on the spike up. That's the next target on the way down if it can't get back up here in this range. Now, we'll look at the dollar here in a second. It looks to me like it's going to at least try to test up into that area before it's over. So we should expect a test back into that low. That's about 117.77. So we're sitting at a 116.33, 117.77. The way it could trade, though, of course, is on down to this 1487 number, which is the top of this bar, potentially all the way down to 113.39, which is the bottom of that bar. This is the key bar now in focus on the way down. And so if we get another leg down, we'll look at adding again. And if we get a leg underneath that, we'll look at adding that one as well. So that's the way the gold trade's set up. If it bumps up, may take a little bit off, may not. I don't have a huge position in this. I want to build it larger, so I'm not in a rush to take off anything. I do think that we're going to get an eventual breakout to the upside. And I say that because when we look at it here on this time frame, the low here again, 112.98, almost the same number that we saw over there. The bullish breakout was here, right? That's on this bar. That's the zone that it's coming back into. If it extends underneath it and gets into this bottom area here, then we might have to think a little bit differently about it. But right now it's doing a bullish retest regen, right? It's going to try to regenerate higher out of this. If it gets under it, that would say, okay, we're going to take longer to do that. Then it becomes more of a trading range, and then that's when we think about trading it more up and down versus trying to position for a longer term breakout. An over-under on the monthly so far. We'll see if it ends that way. I don't take this as a big deal. What I'm more interested on the monthly here is where do we close it with respect to this bearish retest regenerate. Top of that is 115.96. We're still above it, and not that far. That's going to be the question this week. And then finally, if we go over and take a look at the dollar looks like it's going to try and pull back now. This week did a little over under itself. If it pulls back, that should help gold. We should see gold try to bounce a little bit more again and probably close out the month over that bearish retest regen. So that's the way gold sets up. If you're looking at the GDX has been stronger. That's partly dependent on the fact that the equity markets have been stronger. It has pulled back with some big volume again. Again, this to me is the same sort of thing we saw in the gold market, and that is that you have the big spike up bar here. That's this bar. And so the range of that bar is kind of the ideal spot to be thinking about buying. It had spiked up above it, right? You can see it's stronger. Again, I believe that's tied more to equity market versus just gold itself. But it's a nice looking market. Pull it over, look at it on a weekly, as you can see how it's stronger than gold itself. So when this reverses, it will get a bigger drop, so don't get too heavy in it. This one, on a longer term basis, not as strong as gold. That's part of the makeup that's taking place right now. It has that bearish retest regen, and so far it's hit it with more volume, but it hasn't been able to get over it, stay over it. So again, I think we're going to see a bump up and then potentially some sort of a further decline to the downside, and you want to try and position yourself on that next decline. That's these charts and how they shape up so far here on March 28th. Thanks.